Welcome to the Russell Investments Market Week in Review for the week ending July 12th, 2024. I'm your host, Chris Kalman, Regional Director for Southwestern Ontario. Joining me today with sharp insights into the latest economic trends around the globe is my wonderful colleague and investment strategist, Fei Chenlin. Fei Chen, how are we doing today?
Doing well. How are you, Chris?
I'm fantastic. Thank you for asking. Well, we've got a lot to unpack this week. And perhaps there's no other more important place to start than diving into the June CPI numbers released earlier this week in the US. So Bei Chen, what do the latest US CPI numbers indicate about the progress of the inflation fight? And when can investors expect the first Fed rate cut to happen?
Sure thing, Chris. So the CPI numbers that were released earlier this morning on Thursday, July 11th were pretty good news from an economic perspective. Analysts were looking for core inflation of around 0.2% month over month, and instead we got core inflation that was closer to 0.06% month over month. And that's an important sign because ultimately, as you know, Chris, the Fed has for some time now been trying to get inflation back down towards the 2% target. That's why they've had to lift interest rates up from near zero up to the current level of between 5.25% and 5.5% in order to try to bring inflation back down towards target. And we are seeing progress. This inflation report means that in the second quarter of 2024, the momentum on that disinflationary path continued, even though the first quarter was a little bit more challenging. And from our perspective at Russell Investments, we continue to think that over time, the Fed will likely be successful in bringing inflation back down to that 2% target. But there is that minor caveat that it doesn't mean that every single report is necessarily going to be smooth. Nevertheless, I do think that today's report was a pretty encouraging one, and I think that it further makes the case that the Federal Reserve should be in a position to make their first rate cut in September this year. In terms of the market reaction today, it was actually quite interesting because we saw large cap equities as measured by the S&P 500 actually end slightly lower on the day instead of higher. And I think the reason for that was because there was already a lot of optimism baked into large cap US equities. When we look at our proprietary measure of investor sentiment here at Russell Investments, we see a lot of signs that investor sentiment is directionally overbought, and it's getting close to, but not quite yet at that euphoria level. So because so much optimism has already been effectively priced in, that's probably one reason why you didn't see a more positive reaction from large cap equities. On the other hand, what we saw today was small cap equities did quite well. The Russell 2000 was up sharply as of July 11th, 2024 on the day, and partly because small cap equities are generally more rate sensitive than large cap equities. So if markets are becoming more confident that the Federal Reserve will be in a position to cut interest rates, then it's understandable to see that reaction from small cap equities. Although it's also worth noting that even with today's positive performance from small caps are still significantly lagging behind large cap equities year to date in 2024. And then finally, just on the bond side of things, we did see bond yields fall quite sharply today as a result of the better than expected inflation data as well.
Awesome. Shifting gears now to Canada, which is where I'm based out of, and I know your former home country. We've got our big CPI announcement for the month of June happening on Tuesday of next week, July 16th. May CPI in Canada, as we know, came in a bit hotter than expected. So what should investors be on the lookout for on Tuesday when June's CPI numbers are released?
Yeah, Chris, I definitely miss Tim Hortons. And you're absolutely right. I think the June CPI report that's going to be released for Canada is absolutely critical. The Bank of Canada's next policy meeting is going to be later this month in July. And so the inflation report for the month of June is going to be the last big report that the Bank of Canada will have access to before they have to make their next decision. And the Bank of Canada is in a bit of a tough spot because on the one hand, when we look at the growth dynamics and when we look at the labor market in particular, the job market in Canada is far weaker than the job market in the US. The most recent June payrolls report suggested that the Canadian unemployment rate actually increased compared to the month of May, and the Canadian unemployment rate was actually higher than what people were expecting. So based purely on the labor market dynamics, one might think, well, the Bank of Canada should be cutting interest rates at the next meeting. The only tricky part for the Bank of Canada, though, is that when we look underneath the surface of that June payrolls report, we saw that wage pressures actually accelerated in Canada for the month of June. And the reason why that could be a complicating factor is because, generally speaking, wages are a key input cost for services businesses. And although the correlation isn't always one-to-one, there is a pretty good connection between wage pressures and ultimately services inflation. And if you think back to the May CPI report for Canada, services inflation was a bit on the sticky side. And so I think the June report that's going to be released on Tuesday is going to be absolutely critical in determining if the Bank of Canada can cut rates once again. If the June CPI report shows further progress on the Bank of Canada's inflation fight, if they can bring core inflation down, then I think the Bank of Canada would be in a good spot to be able to cut interest rates at their July meeting. But if core inflation remains sort of stuck at that 2.7% year over year level, or if it actually even slightly reaccelerates from that 2.7% year over year level, then I think the Bank of Canada might even have to defer their second rate cut to the month of September. It's going to be a pretty important report to watch. So for those who are based out of the west coast of Canada, make sure you set your alarm clocks early in the morning.
Wonderful. I know myself and a lot of my fellow Canadians will be glued to our computers on Tuesday to see where June CPI numbers come in. Switching gears now to the other side of the world. What's the third plenum that's taking place in China next week? And why is it worth monitoring?
So the third plenum is one of the key policy meetings of China. And the reason it's worth monitoring is because the Chinese government has announced a 5% GDP growth target for 2024. If that number sounds familiar, it's because it's the same growth target that they had set in 2023. But the key difference is in 2023, it was relatively easier to hit that 5% GDP growth target because of a relatively weaker year of activity in 2022. Now, as we stand here in 2024, it's going to be harder to achieve that 5% growth target without doing more stimulus. Now, from our perspective at Russell Investments, we think that the government of China is very committed to that 5% growth target, and we think that they're willing to do what it takes in terms of stimulus in order to be able to achieve that growth target. And we do think, having seen some positive momentum in terms of the stimulus measures that they've announced thus far, we do think that with additional stimulus, they could be on track to achieve that growth target of around 5%. But it's going to be very important to monitor exactly what type of stimulus measures get announced, what are the magnitude of some of those stimulus measures, and what sectors those stimulus measures are aimed at. For example, we know that certain sectors like the property market in China has been in a little bit of a tougher spot. We know that consumer confidence in China has been in a little bit of a tougher spot. So it'd be important to see where that stimulus is aimed at as well. So that's why we're going to be monitoring that closely.
Outstanding, Beichen. Thank you as always for your wonderful insights and knowledge. While summer vacation might be consuming calendars, there's still no shortage of key topics across the market for us to discuss. That concludes this week's Market Week in Review. Stay informed, invest wisely, and we'll see you back here next week.
Hi, I'm Sophie Antel-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.